What if I told you that in 5 years, the big four accounting firms will not exist as we know them today because private equity is about to change everything? Would you believe me? Here's another question. Would you sell your soul and half your firm for $1 billion? That's what some of accountants' biggest names are doing right now. It's a crazy world out there. We're going to hit private equity today. Is your accounting firm going to become obsolete with PE money pumping billions into selected firms? Some of us could face being extinct. That is an interesting, very cheery thought for today's Accounting Influencers podcast. When the biggest accounting firms are selling out to Wall Street and being dramatic, should you be worried or rushing to join them? And what happens when all of these profit-hungry investors start controlling audit opinions? Private equities infiltrating accounting firms at an alarming rate. And how would you feel if your biggest competitor suddenly had millions in their war chest to steal your best clients and your best talent? Are we witnessing the death of independent accounting firms? PE thinks your firm is undervalued. They think they can make money out of it. They think they can do it better. And there's a lot coming at you if you are not aware of what is going on. That's what we aim to do in the Accounting Influencers podcast, give you the news and show you how it's relevant for you as a leader. I'm Rob Brown. And if you're a leader or influencer in an accounting firm looking to build your strategic importance and authority, you need to understand what's happening right now. So I'm going to share some numbers that may shock you. In the last 24 months, private equity have invested over $5 billion in accounting firms. $5 billion. 8 of the top 25 firms are either owned by or in talks with PE investors. That could be the UK or the US, probably name your own countries there. Firms that take PE investment are growing 5 times faster than those that don't. I'm not going to source these stats. You can find them everywhere. This isn't just another trend. This is a fundamental reshaping of how accounting firms operate, compete, serve clients. Baker Tilly sold half their firm for $1 billion. And they weren't just taking an investment. They're betting on a completely different future for accounting. Grant Thornton followed. Citron Cooperman joined in. These aren't isolated decisions. This is the start or even the middle of an avalanche that is transforming the accounting profession. Depending on your firm, your ownership in the firm, you might already be having equity conversations. You may be talking about M&A stuff right now. Well, why should you care? Well, PE is changing 5 fundamental aspects of the accounting profession that's directly impacting you, your career, your future, your team. So we're going to go through these, pick it apart so that you can be more influential, more authoritative, more informed, more relevant, more current. Here we go. First, PE is transforming acquisition of talent and retention. PE-backed firms are offering higher salaries. They're creating new career paths, equity participation. That affects comp structures, doesn't it? Investing in development programs that traditional and independent firms cannot match. One PE-backed firm recently offered first-year managers a comp package that was 40% above market rate plus equity options. How do you compete with that? Just take a thought. Take a pause. Equity and stock options for first-year managers. That takes some getting your head around. Second impact it's having, it's accelerating technology adoption at an unprecedented pace. The tech providers, the software solutions people out there, they're innovating, doing R&D as fast as they can, and AI is becoming a big part of what's being weaved into their product that is now coming out as basic. But goodness me, private equity is not just in accounting firms, it's in the tech, it's in the software, it's in the solutions, it's in the automations, it's in the apps, it's everywhere. And it's driving change at a huge rate. And that change is coming at you if it's not weaved and baked into your firm already. We've done another episode of this show on how big firms are investing massively in tech and AI capability to just keep up. But that is the question. How do you compete with those kind of talent options? And how do you compete with those kind of technology options? PE firms are putting hundreds of millions into AI, automation, advisory platforms. Even though some firms are laying off advisory staff, a recent PE-backed firm spent $100 million on technology in just 12 months. $100 million on technology in just 12 months. That wouldn't have happened without PE money, would it? That's more than most firms spend in a decade. And this isn't just about efficiency. It's about creating entirely new service lines, products that would make traditional practices obsolete. So that's changing the game, and you need to be aware of that. Otherwise, this stuff will blindside you. You become obsolete very quickly. Third impact, it's revolutionizing client experiences, client expectations. When PE-backed firms start offering real-time financial insights powered by AI, predictive analytics, integrated advisory service, clients start to question why their own firm, their traditional firm, is not doing the same, or is not willing to do the same, or cannot do the same. Remember, businesses talk to each other. They talk about the professional advisors. They talk about what their accounting firm, their legal professionals are doing for them, their wealth advisors. They talk about this all the time. They talk about what tech they're using and what it's doing for them. They talk about private equity. So they are comparing you, if you've not got PE money in you, or you've not got the resources to compete with PE money, they're comparing you with their peers that do have PE-backed accounting advisors. One PE-backed firm recently launched a platform that provides daily business intelligence updates to clients. Now, that would have been unthinkable just a few years ago. Still, a lot of accountants in the US, we're slightly more advanced in the UK, but not much more. They don't automate bank feeds. So they're not getting real-time data and up to the minute financial intel on their clients the way they should do. So let me read that statement again. One PE-backed firm recently launched a platform that provides daily business intelligence updates to clients. Business intelligence. Accountants have been accused in the past of lacking the commercial acumen and business intelligence of entrepreneurs and founders, owners of the businesses they represent. But that commercial awareness is now baked in to many services, many offerings, many products. Imagine offering daily business intelligence updates to clients that is really relevant to them, their industry. That's unthinkable just a few years ago, but that is changing the game. You can't do that without huge resource, huge tech, massive integration at all levels of the firm, because it's not just giving clients those business intelligence updates, it's following those up and saying to clients, and it means this, so we can help you in this area. Fourth impact, it's completely reshaping firm business models and firm valuation models. P looks at accounting firms differently than traditional partners do. They see opportunities for scale, efficiency, transformation of services that many firm leaders have not considered because maybe they haven't had the money. They haven't had the freedom to consider it. Recent analysis shows that PE-backed firms are valued 3 to 4 times higher multiples than traditional firms. Think about what that might mean for you if you've got equity in your firm, if you've got retirement plans. We've said on this show before, 75% of accountants and CPAs are at or close to retirement age. What does that mean for the top-heavy nature of your firm? If you are one of those firms where the majority of people are 50 and over, certainly most of the leadership and partnership and equity positions will be held by those that are 45, 50 and over. So if PE-backed firms are valued higher multiple-wise than traditional firms, what does that mean? All the M&A activity that's going on, we know there's a huge amount of consolidation, aggregation. It has implications. You may not even have equity in your firm. You might be in the process of making partner, going for a salaried option or an equity option. But this is changing the game. It changes your career plans. Fifth and final crucial impact of your career, it's creating a new hierarchy in accounting. Think about this. PE-backed firms are moving away from the traditional managing partner model into the C-suite model. We've heard a lot about these business models. So Chief Innovation Officer, Head of Digital Information, Chief AI Officer, Advisory Services Leader. These are roles that are morphing out of traditional accounting firms as they mold to the new world. And these people are not accountants. They might not even have any accounting qualifications, but they are super business savvy. A chief innovation officer. Imagine an accountant doing that job. And I'm not saying that they can't. There are some very innovative accountants. But generally, if you're a PE backed firm and you've got a chief innovation officer, that CIO is not going to be too steeped in the accounting world. They're going to have a heads up on all kinds of different industries and sectors and seeing what's working and bringing expertise from so many different backgrounds to bring that into an accounting firm. They've probably been appointed by the PE backed firm that took a position in your firm. But these new roles, these come with significant authority, significant scope, significant compensation, significant power. And traditional firms, independent firms will find it harder to compete and offer comparable opportunities. If you're staying independent and moving to a C-suite model, changing your comp structure, great. But you've got to get really high-level people in that are probably not promoted from within into your firm. I don't know how much that will take, what kind of package you would have to offer them, how you would even recruit for that. But here's what makes this all really critical for you as an accounting leader. Private equity is exposing the gaps between forward-thinking and traditional firms. And we're seeing more of a gap these days between firms that are not particularly tech savvy, a little bit behind the curve. Accountants as a breed tend to be laggards. There are very few early adopters in the accounting world. They are there, but progressive firms tend to be driven by external forces like private equity. That doesn't tend to come from within because there's a certain status quo, there's a certain comfort level, there's a certain tradition that comes with being that staple, old school accounting firm. Switching Cooperman, I met them recently at a Caseware event that I was chairing in New York. Wonderful firm, took PE investment, immediately invested 100 million in technology and talent development. Within 18 months, they'd launched 3 new service lines and increased revenue per professional by 40%. So Citrin Cooperman, you can look them up, great firm, US based, took private equity investment, put 100 million into technology and talent development within 18 months. That's fast, isn't it, in the accounting world? For a profession that's been as it is for thousands of years, within 18 months, they'd launched 3 new service lines, increased revenue per professional by 40%. That's a great metric. That's the kind of transformation that affects everyone in the market. So as a leader, you need to understand these changes for 3 crucial reasons. This is the takeaway now. This is the application. 1, your strategic value depends on it. Leaders who understand PE and its implications can guide firms through the turbulence, through the transformation. Those that don't understand this, they'll become obsolete. In the last year alone, 4 managing partners were replaced in private equity-backed firms because they could not adapt to the new reality. Adapt or die. You've heard that phrase before. If managing partners are being replaced because they can't adapt, there's a lot of people below managing partners as well that will not adapt. So that's going to affect your prospects. Takeaway number 2, your team is watching. You're a leader. You set the example. You set the tone. You drive culture. So your people around you are watching. They're listening. They're talking to their peers. They're reading about PE investments. They're wondering what it means for them and their careers and their future. They're seeing colleagues at other firms take new deals, new opportunities. They're wondering if they should make a move. They're wondering if your firm is making a move. Recent surveys show that 65% of accounting professionals under 40 would prefer to work for a PE-backed firm. This is the younger generation coming through, making a bold statement. I'll say that again. 65% of accounting professionals under 40 would prefer to work for a PE-backed firm. Why? What are they going to get in a PE-backed firm that they wouldn't get in a traditional non-PE-backed firm? Well, they'd get better technology. They'd get more commercially aware leaders, probably more career opportunities. They'd get a better package. They might get equity themselves or share options. They'd get a fast track. They'd get a probably really interesting work because the firm would be moving that quickly. That firm would also be attracting the best clients, the best projects, the best opportunities. That firm would be the most profitable. I'm speculating, but you see where I'm going with this. If 2/3, that's nearly 65, over 65% of accounting professionals under 40, if you're listening to this, you're under 40, would you prefer to work for a PE-backed accounting firm? Maybe you do now. I'm not saying it's the panacea to everything. I know I coach some accountants in PE-backed firms that are struggling with the sheer amount of change and turbulence and lack of voice. It's not easy. I'm not saying it's the answer to everything, but these things are impacting. So let's just recap what we've got here. Takeaway number one, your strategic value depends on knowing what's going on, understanding the PE world, how it affects the political, commercial environment. If you don't get your head out of the sand, you're going to be obsolete. If you can't adapt, you're going to be put on the scrap heap. Second application, your team's watching. You're the leader. People look to you for direction, for vision, for hope, for clarity, for context. And a lot of people are going to make a move. The third takeaway here is your clients are asking questions. They want to know how changes in the accounting profession is going to affect what you're doing for them. They're seeing tech changes. They might be pushing you for changes. They might be pushing you for daily business intelligence updates. They're wondering if they need a larger, more agile, private equity-backed firm if they haven't got one right now. They're talking to their peers. Their expectations are going up. Remember, more and more business owners are under 40. Entrepreneurs are out there. Startups are happening all the time. And with AI, there's a very low barrier to entry. So these businesses making significant money are coming in and they are agile. They are moving super fast. They are scaling up. They are 10xing. And they are wondering if they need to switch firms. Some PE-backed firms are reporting client acquisition rates 300% higher than traditional firms. Where are those clients being acquired from? Some PE-backed firms are reporting client acquisition rates 300% higher than traditional firms. Clients are switching. Clients are jumping ship. They're going to more agile, tech-savvy, commercially savvy, smartly run accounting firms with the best advice, the best platforms, the most up-to-date intel. All of that stuff needs funding. Every vision needs provision. If you're not being provided for, if you haven't got provision to make these necessary changes, you're going to struggle. So some critical actions you need to take as we draw this to a close. As a leader, start by understanding the PE models in accounting. Do a little bit of research. There's plenty going on in the news. I won't recommend any in particular. You can source your own area of news. In fact, I will recommend one. I really like Going Concern. They're quite controversial. They're quite in your face. Accounting Today is great. CPA Trendlines is great. They're keeping you in the loop. Develop a deeper understanding of equity models. There's different ways of doing private equity in case you didn't know that. But you're an accountant. You're a business advisor. You should know all the different ways PE works. So know how PE values firms, what changes they are planning to implement if they do take over, what metrics they're looking at, how they measure success. All of this knowledge will make you a better leader because you're making better strategic decisions for your firm and your career. Here's another application for you. Assess your firm's vulnerabilities, competitive position really honestly, brutally, vulnerably. How are you stacking up against PE firms under the broad headings of technology, talent development, service offerings, client experiences? Where are you strong? Where are you vulnerable? You've got to create a clear plan and a path to address those gaps. That's something else you got to be thinking about. Third, you've got to be a better storyteller. So develop a compelling narrative about your firm's future. you've probably got a hiring responsibility, a hiring role. You're building a team. You're responsible for keeping your team. So telling better stories about your firm's future, where you're going, why you're going, where you're going. If you're taking on PE money, why? If you're resisting PE money, why? And how are you going to compete? So whether you're staying independent or you're taking the dollar, your team, your clients need to understand your strategy. They need to understand the why behind it. And that narrative needs to address the opportunities and the challenges in the changing market. And I'd also say build your personal brand around change development, change leadership. If you have the ability to navigate and lead your people through industry transformation, that's a critical leadership skill. So position yourself as someone that understands and, more importantly, that can manage these changes. Remember, you as a leader, you're not just implementing change, you're setting the tone about how your firm, your office, your department, your service line responds to this transformation. And understanding PE and its implications, that's going to influence whether your team sees these changes as opportunities or sees them as threats. And you are their beacon, you are their lighthouse, you are their true north, their shining star. Even if you're lower down in the ranks, you can give huge clarity and context to what is going on out there. I'm drawing to a close. I've gone off a little bit on this one. I'm over the 20-minute mark, but it's super exciting. It's fast. We're entering a significant period of transformation in accounting, probably the biggest one since computers came in. And P is not just providing capital, it's accelerating changes that were already coming. You're seeing them around you, you're experiencing it. And the leaders who thrive will not necessarily be the ones with the most resources. You can be given billions of dollars to build a baseball team or a soccer team, but it doesn't guarantee you trophies. The leaders that thrive the most will be the ones who can best navigate and understand and capitalize on the change that's going on. If you're a leader in an accounting firm, I'm working with a few in 2025 to help them establish their thought leadership, their personal brand, their authority position by interviewing them once a month and turning that into articles and video snippets that gets right to the heart of what you're passionate about and what you're really good at. And it's a super efficient way of creating lots of thought leadership with your voice and your personality and your interests without having to write blogs and articles and go to ChatGPT and everything else. If you're interested in that, reach out to me on LinkedIn. We'll have a conversation. That's it for today's episode. Remember, stay informed about industry transformation. Know that it's not just about protecting your position. It's about seizing opportunities to build your influence and authority in your accounting firm and in the business community that you serve. Have a great day.